Most traders don't realize they're broke traders. That's not an insult. It's a blind spot. When people hear broke trader, they imagine someone reckless, someone gambling, someone blowing accounts every week, someone who clearly doesn't know what they're doing. That image makes it easy to distance yourself from the label. But most broke traders don't look like that. They look serious. They look committed. They look like they're doing the work. They watch charts every day. They talk about risk. They know the language. They can explain their strategy. From the outside, they look like they should be profitable by now. That's what makes this difference so hard to see. The real separation between profitable traders and broke traders has almost nothing to do with intelligence, strategy, or effort. It shows up in how they behave when things don't go their way. Broke traders trade emotionally and then explain it logically afterward. Profitable traders decide logically first and let emotion exist without acting on it. That one distinction plays out in 1,000 small moments. You can see it when price hesitates near an entry. You can see it when a trade goes slightly against you. You can see it when a day starts red and the urge to fix it creeps in. Those moments decide which side of the line you're on. Early in my own trading, I thought broke traders were careless. What I eventually realized is that most of them are actually trying too hard. They care deeply. They want to do well. They want to be disciplined. The problem is they let their feelings participate in execution. That participation is expensive. Profitable traders feel the same emotions. Fear doesn't disappear. Doubt doesn't disappear. Frustration doesn't disappear. The difference is those emotions don't get decision-making authority. Broke traders feel discomfort and immediately try to remove it. Profitable traders feel discomfort and keep executing the plan. That gap sounds small. It's not. It shows up in how trades are entered. Broke traders hesitate, wait for confirmation, then chase. Profitable traders enter when conditions are met, not when it feels comfortable. It shows up in how trades are managed. Broke traders tighten stops too early or exit winners quickly because profit feels fragile. Profitable traders let the trade play out because the plan already accounted for discomfort. It shows up in how losses are handled. Broke traders feel urgency after a loss. Profitable traders feel information. I didn't understand this at first. I thought being emotionally invested meant I was taking trading seriously. I thought intensity equaled professionalism. It doesn't. Intensity clouds judgment. Profitable traders are calm, not because they're confident in outcomes, but because they're confident in their process. They've already accepted uncertainty before the trade is placed. That acceptance changes everything. If you've ever noticed that your best trades happen when you're calm, and your worst ones happen when you're emotionally charged, like the video, because this distinction is the foundation of everything else. Broke traders feel rushed. Every session feels important. Every missed move feels costly. There's this underlying pressure to make something happen today. That pressure pushes them into trades that don't deserve capital. Profitable traders don't feel chased by the market. They understand that opportunity clusters. They know some days offer nothing, and that doing nothing is a valid outcome. That patience isn't personality-based, it's structural. They design their trading in a way that doesn't require constant engagement. They limit when they trade. They limit how many decisions they make. They reduce the number of chances emotion has to interfere. Broke traders expose themselves to decision fatigue all day. Profitable traders protect their mental energy. That difference compounds. I've watched traders sit in front of charts for 8 hours straight and wonder why they make mistakes late in the session. It's not because the market changed, it's because their brain is tired. Profitable traders understand that fewer decisions made well beat many decisions made under pressure. If you've ever traded longer than planned and noticed your discipline slipping, comment energy. That word captures a difference most traders overlook. Broke traders see rules as guidelines. They follow them when it feels right and bend them when they feel justified. They believe flexibility makes them adaptive. Profitable traders treat rules as non-negotiable under pressure. They know that the moment rules become optional, consistency disappears. Rules exist to protect you when judgment is compromised. Early on, I broke rules and told myself I was adapting to the market. What I was really doing was adapting to discomfort. Every exception trained me to trust impulse over structure. That's how accounts slowly bleed. Profitable traders don't argue with their rules mid-trade. They already made the decision earlier. That separation between planning and execution is critical. Planning is thoughtful, execution is mechanical. Broke traders blend the two and wonder why execution feels chaotic. Broke traders measure progress in P&L swings. A green day feels like progress. A red day feels like failure. Their confidence rises and falls with results. Profitable traders measure progress in behavioral consistency. Did I follow my plan? Did I manage risk correctly? Did I stop when I was supposed to? That measurement stabilizes emotions. Once I shifted my focus away from daily P&L and toward execution quality, trading became quieter. Losses didn't spiral into frustration. Wins didn't inflate ego. I could walk away from a day knowing whether I did my job, regardless of outcome. That internal stability is rare among broke traders. If you currently judge yourself by daily results, subscribe. This channel is about building consistency that doesn't depend on short-term outcomes. Broke traders beat themselves up emotionally. They replay trades with frustration. They tell themselves they should have known better. That self-criticism doesn't improve behavior. It just adds pressure. Profitable traders analyze mistakes without emotion. They look for patterns. They make one adjustment at a time. They don't rush correction. Rushing correction creates more mistakes. I've seen traders sabotage progress because they try to fix everything at once after a bad day. Profitable traders understand that improvement is incremental and patient. There's also a massive difference in how information is consumed. Broke traders constantly search for new ideas, new strategies, new indicators, new opinions. Information becomes a coping mechanism when results aren't there. Profitable traders are selective. They consume less. They protect clarity. They understand that more information often creates more hesitation. If you feel overwhelmed by trading content but still inconsistent, share this video with someone who's in the same cycle. The line between profitable traders and broke traders isn't drawn by talent. It's drawn by behavior under pressure. And that behavior shows up long before the money does. Someone who's in the same cycle. We're still early in this conversation. The line between profitable traders and broke traders isn't drawn by talent. It's drawn by behavior under pressure. And that behavior shows up long before the money does. Broke traders take being wrong personally. Even when they don't say it out loud, there's an internal reaction that hits fast. A losing trade doesn't just feel like a cost of business, it feels like a judgment on their intelligence, their preparation, their ability to figure this out. That reaction creates tension immediately. You can feel it in the body, tight shoulders, shorter breathing, a need to do something so the loss doesn't sit there unanswered. That's when decisions start slipping. That's when discipline gets renegotiated. Profitable traders don't attach identity to being right. They expect to be wrong often, not in a pessimistic way, in a realistic one. They know that even a strong edge produces losses regularly. So when a loss happens, it lands where it's supposed to land. On the system, on the sample, on the statistics. Not on them as a person. That separation is everything. I remember early on feeling embarrassed by losses even when no one else knew about them. I'd sit there replaying the trade, asking myself why I couldn't just get it right. That self-talk didn't make me better. It made me tense. And tense traders make bad decisions. The moment I stopped needing trades to validate me, execution improved almost immediately. Not because I became smarter, but because I stopped flinching every time the market disagreed with me. That flinch is subtle, but it shows up everywhere, and it shows up when you hesitate on the next setup. It shows up when you cut size just this once. It shows up when you avoid a valid trade because you don't want to be wrong again. Broke traders let that flinch guide behavior. Profitable traders notice it and keep going. If you've ever skipped a clean setup because the previous trade didn't work, like the video because that moment reveals which side of the line you're standing on. Broke traders hope to avoid losses. Profitable traders assume they're coming and build around them. That assumption changes how risk is approached. Broke traders size based on how confident they feel. Profitable traders size based on what the system can tolerate. Confidence fluctuates. Risk tolerance should not. When risk is tied to emotion, drawdowns become unbearable. When risk is tied to structure, drawdowns become manageable. I've seen traders who were technically sound blow accounts simply because they risked too much relative to their emotional tolerance. They could explain risk management perfectly, but emotionally they weren't built to handle the swings they created. Profitable traders know their own limits and respect them. They don't size up to feel powerful. They size down to stay consistent. That humility is profitable. Broke traders want to be patient. Profitable traders engineer patience. Wanting something doesn't make it happen under pressure. Engineering it does. Profitable traders reduce the number of opportunities they can act on impulsively. They trade fewer sessions, fewer setups, fewer instruments, fewer timeframes. Broke traders keep everything open and wonder why discipline slips. The more options you give yourself, the harder consistency becomes. I've watched traders add markets thinking it would increase opportunity. What it actually increased was noise. More charts meant more temptation. More temptation meant more impulsive trades. Profitable traders go the other direction. They narrow focus until execution becomes repeatable. That narrowing feels restrictive at first, then it feels freeing. Broke traders see boredom as a problem. They think it means they're missing something. They start scrolling charts looking for reasons to act. Profitable traders see boredom as confirmation. It means nothing requires their involvement right now. This is where most people struggle because boredom doesn't feel productive. But productivity in trading isn't measured by action, it's measured by restraint. If you've ever taken a trade just to feel involved, comment boredom. That awareness is a turning point. Broke traders get emotional after wins, relief, excitement. Confidence spikes. That emotional high often leads to looser standards on the next trade. Profitable traders stay neutral. A win doesn't change their behavior. It doesn't raise risk. It doesn't justify more trades. It's just one data point in a long series. That neutrality protects consistency. I didn't understand this early on. Wins made me feel like I finally figured something out. That feeling pushed me to trade more aggressively, and I'd give profits back shortly after. Once I learned to treat wins the same way I treated losses, as information, my equity curve smoothed out. Broke traders try to learn while trading. They experiment live. They tweak rules mid-session. They chase improvement in real time. Profitable traders separate learning from execution. They test outside the market. They adjust between sessions. They keep execution clean. Learning mode and execution mode require different mental states. Mixing them creates chaos. If you're constantly changing things during live trading, subscribe. This channel is about building a process that actually holds up under pressure. Broke traders think in days and weeks. Profitable traders think in months and years. That time horizon changes how stress is processed. A losing day doesn't matter much when you're focused on the year. A missed trade doesn't matter when you're focused on the process. Zooming out reduces emotional volatility. I've noticed that traders who stay broke often feel like they're running out of time. They feel behind. They feel urgency to catch up. That urgency is expensive. Profitable traders don't rush. They know rushing increases error. They let progress unfold. If you've ever felt like you're behind in trading and need to make something happen fast, share this video with someone who needs to hear that pressure creates more problems than it solves. The difference between profitable traders and broke traders continues to show up in subtle ways most people don't notice until it's pointed out. You can also see the difference in how each trader treats consistency. Broke traders chase consistency like it's a feeling they're supposed to reach. They think one day they'll wake up calm, focused, disciplined, and from that point on, everything will flow. When they don't feel that way, they assume they're not ready yet. Profitable traders don't wait for consistency to arrive. They create it through repetition. They accept that some days they'll feel sharp and other days they won't, and they trade the same way anyway. The rules don't change based on mood. Size doesn't change based on confidence. Frequency doesn't change based on frustration. That sameness is what builds reliability. I remember realizing that my best stretches didn't come when I felt amazing. They came when I felt neutral. No urgency, no excitement, just execution. That neutrality felt strange at first, like something was missing. What was missing was emotional interference. Once that clicked, trading stopped feeling dramatic. And that's when it started working. Broke traders obsess over streaks. A losing streak feels like danger. A winning streak feels like momentum that needs to be pushed. Both reactions distort behavior. Losses create fear. Wins create overconfidence. Profitable traders expect streaks. They know variance clusters. They don't change behavior because of them. They stay anchored to risk limits and process. That steadiness prevents emotional whiplash. If you've ever noticed yourself trading differently after a few wins or a few losses, like the video because recognizing that pattern is the first step to breaking it. There's also a clear difference in how each trader relates to money itself. Broke traders see money emotionally. Profit feels like relief. Loss feels like pain. Money carries meaning beyond numbers. It represents progress, validation, security. Profitable traders see money functionally. It's inventory. It's fuel. It's something to be allocated and protected. Emotional attachment is minimized because attachment distorts judgment. That detachment doesn't mean they don't care. It means they care about the right thing. I had to learn that treating money emotionally made me protect it in the wrong ways. Cutting winners early, avoiding valid risk, holding losers longer than I should. All of that came from attachment. Once I started treating money like a tool instead of a scorecard, decisions improved immediately. Broke traders look for feedback in outcomes. Did I make money? Did I lose money? That binary doesn't offer much guidance. It just reinforces emotion. Profitable traders look for feedback in behavior. Did I follow rules? Did I respect risk? Did I stop when I was supposed to? That feedback is actionable. When behavior becomes the metric, improvement becomes practical. If you're currently judging your progress only by P&L, subscribe. This channel is about shifting the scorecard to something that actually leads to growth. There's also a noticeable difference in how each trader handles uncertainty before entry. Broke traders wait for comfort. They hesitate. They want confirmation. They want the market to reassure them. By the time that reassurance shows up, the opportunity is gone or risk is worse. Profitable traders accept discomfort as part of entry. They don't need certainty. They need alignment with rules. Once alignment is there, they execute. That decisiveness doesn't come from confidence in outcome. It comes from trust in process. I've seen traders miss countless good trades because they were waiting to feel ready. That readiness never comes. Action creates readiness. Broke traders remember mistakes emotionally. They replay them with regret. They internalize them. That memory carries forward and affects future decisions. Profitable traders remember mistakes structurally. They note conditions. They adjust rules if needed. They move on. One memory creates fear, the other creates improvement. If you've ever caught yourself replaying old losses while trading new setups, comment memory. That awareness matters. There's also a difference in how each trader approaches simplicity. Broke traders often equate complexity with sophistication. More indicators, more rules, more nuance. They think complexity protects them. Profitable traders value simplicity because it holds up under pressure. Fewer rules are easier to follow. Clear criteria reduce hesitation. Simple processes survive stress. Simplicity isn't ignorance, it's refinement. I learned that the hard way after overcomplicating everything and still making the same emotional mistakes. Removing complexity didn't remove edge. It removed confusion. Broke traders externalized. The market was choppy. The news ruined it. The session was slow. Those explanations feel comforting. Profitable traders internalize. They ask what they could control better. Did I overtrade? Did I violate rules? Did I trade when I shouldn't have? That accountability accelerates growth. If you've ever blamed conditions without examining behavior, share this video with someone who needs that mirror. As this difference becomes clearer, you start to see why so many traders hover around the same results for years. They keep doing the same behaviors with better explanations. Profitable traders change behavior first and let results catch up. As this difference becomes clearer, you start to see why so many traders hover around the same results for years. They keep doing the same behaviors with better explanations. Profitable traders change behavior first and let results catch up. What ultimately separates profitable traders from broke traders isn't talent, intelligence, or luck. It's ownership. Broke traders feel like they're participating in the market. Profitable traders feel like they're operating a business inside it. That difference sounds abstract until you feel it. When you're a broke trader, you sit down each day wondering what the market is going to give you. You're reactive. You're responsive. You're hoping conditions line up in your favor. Even when you have a plan, there's still a sense that the market is in charge and you're adapting to it moment by moment. Profitable traders flip that relationship. They know exactly what they're willing to do and what they're not. They don't ask the market for permission. They don't chase. They don't negotiate. They show up with boundaries already defined and operate inside them. That sense of ownership removes desperation. Desperation is what keeps traders broke. Desperation makes you overtrade. Desperation makes you size too big. Desperation makes you break rules when things don't feel good. You can feel desperation in the way decisions are made quickly, emotionally, and defensively. You can feel it when a trader needs today to work because yesterday didn't. You can feel it when someone can't walk away from a bad session because they need closure. Profitable traders don't need closure. They close the platform and move on. I remember the first time I ended a red day without trying to fix it. No revenge trade, no extra setup, no forcing. I didn't feel relief right away. I felt exposed, like I was leaving something unfinished. The next day, execution was clean. That's when I realized how much damage the urge for closure was doing. Broke traders think discipline means forcing yourself to do the right thing in the moment. Grinding through discomfort, white-knuckling decisions, fighting impulses. Profitable traders don't fight impulses. They design environments where impulses have less power. They reduce the number of trades they can take. They cap daily risk. They limit time at the screen. They automate decisions where possible. Discipline becomes structural instead of emotional. That's why it looks effortless from the outside. I've seen traders burn themselves out trying to be more disciplined, never realizing they were putting themselves in situations where discipline was constantly under attack. Profitable traders don't rely on strength. They rely on systems. That's ownership. There's also a difference in how failure is defined. Broke traders think failure is losing money. Profitable traders know failure is breaking process. Once that definition changes, fear loosens its grip. You're no longer afraid of losses. You're afraid of inconsistency. And inconsistency is something you can actually control. That's empowering. I've talked to traders who finally crossed into sustained profitability and asked what surprised them most. A lot of them said the same thing. Trading stopped feeling important. Not in a careless way, in a grounded way. It stopped dominating their emotions. It stopped bleeding into their identity. It became something they executed and stepped away from. That emotional separation is what allows capital to grow without the trader getting in the way. If trading still feels like it defines your day or your mood, subscribe. This channel is about getting trading into its proper place so it can actually work for you. Broke traders need proof constantly. They need to see results to believe the process is working. When results pause, belief wavers. Profitable traders trust lag. They know behavior changes before outcomes do. They don't panic when results take time to reflect improvements. They stay the course long enough for compounding to show up. That patience is rare. Most people quit or change direction right before things stabilize. That's why so many traders are technically capable but financially inconsistent. The last thing I'll say about the difference between profitable traders and broke traders is this. Profitable traders stopped asking the market to change. They changed how they showed up to it. They stopped reacting. They stopped chasing. They stopped negotiating with themselves under pressure. They took responsibility for execution and let outcomes be outcomes. If this video helped you see where you might be leaking consistency, share it with someone who's been grinding without progress. Sometimes this clarity is the catalyst, and if you're ready to stop trading emotionally and start trading deliberately, comment ownership. That word represents the line between hoping and operating. That line is the difference between profitable traders and broke traders. Once you cross it, there's no going back, because you finally understand what's been holding you back all along.